Hey guys, welcome to the Stock Option Assassin weekly video for swing trading options. This is Eric. Today is June 15th, 2012, and the market just closed. It's a little bit after 4, and we're taking a look at the SPY first, and I want to kind of just look over some patterns here. You can see the obvious head and shoulders we had. We broke down, found support around the 200-day a couple weeks ago, had this bullish engulfing candle. We popped back up and consolidating above the 20, and what I hear a lot of people talking about this. Let me draw this in. This inverse head and shoulders, where you have this pattern here. There's the left shoulder. You have the head, and then you have the right shoulder. And technically, we have not broken this, so this is not an official pattern. I am not liking this as a reverse, or excuse me, inverse head and shoulders. The right shoulder just seems too weak to me, and in theory, if this thing does break, you would look for some sort of, if this was a true head and shoulders, some move back up to retest the highs. I'm just finding that hard to believe, but, I could definitely be not 100% right on that. So what we're playing in the MTS, our options swing trade service, is we've been basically net short, but we've been taking it very small with any sort of day position. You can see this was the right call this week. We are net short. However, any long trades we did not take. We didn't want to take any trades going into the weekend. You obviously have the Greek elections this weekend, and that's really going to determine. I've seen some articles talking about, if the one guy wins, that's bullish. If the other guy wins, that's bullish. But what's not bullish is the fact that you have manufacturing data that is not, on the U.S. economy that's slowing down. You have sentiment, consumer sentiment's kind of slowing down, manufacturing. So there's a lot of not so great economic numbers, real numbers coming out. Jobless claims are edging up. So why are we rallying? And the reason is this whole rally we've had since the beginning of June really is based on the idea that of hope, that the Fed is going to step in, or the ECB or the IMF or somebody's going to step in and basically either print more money, give out a bailout, and maybe that gives a little goose to the market. Technically, though, we're more technical traders here. You do have to keep an eye on the news. Technically, what I'm seeing is resistance, resistance, resistance. You can see we're right. This 134 was tough resistance. We managed to kind of close above this. You have the 50-day moving average at 135, and then you have this previous support at around 135.78. We'll call it 136. So this 135 to 136 area, if we get a pop in the next week, if for some reason the market does take the Greek elections as bullish, you'll know Sunday night if you look at the ES futures, but I would be looking to sell this. And if we look at the IWM, that's actually what we're short. IWM, the weaker of the indexes, you have a lot of support again up at the 50, resistance up at the 50 of previous support here right around 70. So really the 78, maybe 78.50 area is where we would be looking to add to our shorts for a retrace, and then we'll take it from there. Another short play, which is sort of an inverse to the market, is the TLT. This is kind of considered one of the safe havens of bonds, and you can see we did have a kind of sell-off. We're consolidating above the 20. And you notice that, the safe haven, US Treasuries, the safe haven is maintaining its 20-day moving average. And the market is hitting the 200, trying to get back to the 50. So when you compare these two, this is still a very bullish chart starting to edge up again. So we are long TLT calls, short IWM with IWM puts, and these are just straight call and put buying. Volatility will likely increase next week, and we might look at doing something there with that. But right now, what I'm telling our members over the past week is, we're going to stay short. We're going to add to our shorts. We're using July options right now. And then if we do get, if it does pop and we get some consolidation, that looks like it's going to go up, we'll add some calls. But right now, the key right now is capital preservation. The market is so whipsawed this week with quadruple witching that you really just need to stay small, and it's kind of a day trading environment, I think. Swing trades are few and far between right now. If you look at just the range we're in, then, if we look at the daily, yeah, we kind of moved up throughout the week, but it was very volatile and like you would have likely been stopped out. So that's all I got for this week. I'm not putting out any trade recommendations until we see how Monday opens and how the Greek elections turn out. So right now, preserving our capital, taking small positions with a short bias. So if you guys have any questions, let me know. If you're interested in getting our detailed trades, please take our 14-day free trial to the MTS, and we look forward to trading with you. See you.